What up, everybody? How's it going? It is 5:42 or 18:44 in New York time, but 5:42 in Central Time. I'm out here in Texas, and so I go by my time, but the market's running on New York time. I just want to take a second over here to go ahead and do a post-market review, kind of talk about my day, and then also talk about the content that ICT has been posting. He's been posting every single day, and he's been posting about the markets, and he's just dropping bombshells. And so I'm taking time to study every single thing that he says and everything that he puts out there because he's my mentor. So that's what I'm going to study. I don't study anybody else. I don't care what anybody else says. I think there's enough in his content to be able to understand these markets. And I think that everything that he's putting out is for free. And that doesn't make it better. Free is not usually always better. But if you look at the quality of his content and the quality of his trades, then you would know. And if you have a good barometer for the ability to read whether you should trust somebody or not, I think that you would know that he is trustworthy. And so I want to go over kind of the videos that he talked about, and he put out two videos today talking about one pre-market where he thinks the market is going to go for the week. Now, again, this is still speculation at this point. The market still has to perform certain functions, and we have to see how the week kind of presents itself as it goes on to see if that's actually going to happen. But I do take his ideas and his thoughts as something that would be viable, and there's something I want to keep in mind. And obviously today, I feel really good about today. I didn't take the trade that I wanted to take. I hesitated, and then I ended up taking three trades. I think it was three trades, and I'm gonna clip those out of my live, and then I'm gonna post those as well. But I ended up taking three trades. I think I took a break even, a loss, and then pretty much a break even. I was able to get that loss back a little bit, but not by much. The thing is, though, and also this is something that I'm a beginning trader. I'm a new trader. I'm not here. I'm not like when I hop on this computer and I'm looking at these charts and I'm looking at these candles, I'm looking to grow a little bit every single day, and I'm looking to understand how price is booking, how the price charts, what they're communicating to me, what the language is being spoken here, so I can adjust and perform a little bit better every single day. Yes, I do want to make money, and yes, I want to be successful at this, and that's the whole entire game. But I think focusing on the P&L and the money and like how much money I'm going to be making is the wrong method to go about this, and to be focusing more on like your ability to understand price action and what it's telling you every single day is going to be, or is going to put more fruit on the tree for you. And so that's my goal. And I feel like today I did read price action very well. And granted, I didn't perform like I wanted to perform, but these are all different subjects. They're all different subject matter, and they're all pieces of the puzzle. And slowly, this puzzle it needs to get put together, and that's how this works. See, everybody wants to think that they're gonna wake up one day. Like everybody thinks that either you get into trading and you're successful next month, or that you're just not gonna be successful at all. Well, that's just how like poor people think, honestly, and that's how like broke people think. Is like if you're not making money instantly, then it's obviously not worth the time and energy to put into it. But yet they go and spend 8 hours at a job where they're going to make the same exact amount every single year after year, while inflation increases every single year. And so you have to, like every single rich person goes out and learns a new skill that's a high value skill, and then they put that into action. They put those gears into motion, and it takes years. You think people that are like really really wealthy in this world, they just like wake up one day and they're wealthy? No, that's what you see. That's what you look at. But you didn't see all of the nonsense that they had to go through before they were wealthy. You see, we all see the end story, but we never see like the actual the struggle of what everything is. And you can sit here and you can listen to it and you can hear it, but it's the truth. Like you're never gonna be successful if you're not willing to just go through the muck and go through the mud. I've had a lot of hard times in my life, and honestly, I think that like the best times of my life are those hard times. And sometimes you gotta think that like this is the best part of it all. It's like sitting here like trying to decipher this language that I just didn't understand. And the truth is I've been at this for like 8 months now. And I remember my first, like I didn't understand anything. I would watch a video and I'd be like, "What are they talking about?" And now I've gotten to a point where I can narrate. I can watch these candles. I can kind of forecast where the price is going to go. So I know I've gotten better, and I know that like it's just a matter of time before I'm going to be where I want to be, and I'm going to be a profitable trader. And I put this much time into it, so I'm not going to stop. And for me, this isn't something that I'm like questioning. It's just like this is what I'm gonna do. I'm gonna make this happen no matter what. So with that being said, let's go ahead and talk about kind of what ICT talked about. The first thing that he brought up was the daily chart, right? So something he brought up, and he didn't go heavily into this, but he did mention this. He did mention this, and something that I want to mention is this wick right here on the daily chart, right? We used that last week on the way down, saying if we can break consequent encroachment of this wick, it's pretty bearish, and we'll probably hit these lows. And that's exactly what happened. We hit consequent encroachment, we went down, we broke these lows, and that was the target for the week. So just like last week, we have a target for this week. And with that being said, I'll go ahead and hop into the 1 hour chart. Another thing that he had brought up was this 1 hour busy. So this is an interesting 1 hour busy. So we have this 1 hour busy. We used it to propel us further down. And now that's going to be used as a PD array to either press us up or down. We don't know yet. We're not too sure. Obviously, it's looking a little bearish right now, right? But, doesn't mean it's going to be like that forever. It's either an accumulation phase or we're continuing further down. So we're going to find out more. So I'll go ahead and hop into the 1 minute. Along with that, so the things that he was focusing on was the RTH gap. All night we had gone up. We cruised up all night, and then we hit by 8:30 right here. That's the 8:30 opening price. Was right here. We had this high, and then we had this area right here. This is open where we come up, and then we take out these lows, take out these lows, and take out these lows. And then the next target was consequent encroachment. My thesis for the day was pretty much that I think we're going to have a Judas swing, and then we're going to go down, and then we're going to hit the consequent encroachment of RTH. And then at some point we'll hit these lows, which we did, and then we'll hit these lows, which we did. And that was at the bottom of the RTH gap. So something that he mentioned is at opening, this is something that I hadn't really it didn't really click to me until he said it, and he said that we're building a premium relative to the regular trading hours gap. And if you're not familiar with the regular trading hours gap, that is a close at the end of the day. So yesterday's close, or 16:14 at the end of the day, and then the 9:30 open. That is a regular trading hours opening range gap. And so that's something I use often, where there's a 70% likelihood. This is ICT, this isn't me. Likelihood that we're going to hit consequent encroachment of this gap. And we did that by 10 o'clock. And so we did that at about 10:33, I believe. 10:55 we hit it. So it was a little bit after, right there. 10:22. A little bit after. A little bit late. So with that, he also had mentioned kind of like his idea of what he thinks is going to happen for the rest of the week. And I don't know if I'm in agreement quite yet. We'll see. But his hypothetical target, and even he says, I don't know if this is going to happen, but I think this is just what looks good to me is like these highs right here. They're pretty clean highs right here. You even have that one back there. And I agree, those are clean highs right there. And right now we're at the beginning of the week. It looks like we're kind of going lower to move higher. And at the end of the week, we'll come up here. We'll see as Asia session and London session progress tonight, kind of what transpires. Let's see the possibility. Yeah, okay, so we talked about that. Weekly forecasts. Monday, first stage reaccumulation for longs. Reclaim the 1 hour bullish fair value gap. So that's this right here. That would be the next step. So we're going to come down here, take all of this sell side down here, and then we'll start moving up towards this guy. Reclaim this 1 hour fair value gap, which would be pretty bullish. So we'll take the rest of the week up here. And so we have that. So I have a PowerPoint to kind of keep me on track here as well. Cool. So there was a lot to learn today, and I want to just kind of go over that for my own learning, and just have that, in this video for my own personal, because my own personal growth, my own personal development. Obviously, there's really nobody watching these videos anyway, so it's not like it really matters that much anyways. I can do whatever the hell I want to do, and that's awesome. So, okay. Let's get on to the 1 minute. So we're on the 1 minute chart right now, and I remember looking at this. And so what happened for me personally was we were at 930, so 930 was right here. Put an arrow right there just to signify where 930 is. And I remember I looked at this and we had swept through these highs, right? We swept through these highs and then we started a sell off. And in this sell off, we had a CISD, we had a retest of the fair value gap, and then we dropped down further. And that to me looked like we were going to continue going down further from there. I didn't think that we were going to break through this order block or this order block. Like I thought we were going to get a Judas swing, but I thought we would come up here and then we would go down. And that's not really what happened. It happened a little bit differently. So at 9:30 open, what occurred was we opened up and we went straight past. We went right past that thing, and then we went right past there, up here, and we actually hit this 1 minute fair value gap. If you look over here, there's this 1 minute fair value gap right here. We rejected that 1 minute fair value gap, and then we dropped down. We inverse this fair value gap right here, and I'll explain this later. And we come down. We created the first presented fair value gap at 932. We inverse that fair value gap, and then we went down further. And we wound up taking these lows, these lows, these lows, these lows, and these lows on that run right there. And then we kind of like, wiggled around in this area. And in this area, I started taking longs. My thought was that we were going to, and I'll post those videos. I'm going to clip those videos and I'm going to post those as well. My idea was that we were going to take out these highs right here and that we would come back up and utilize this first presented fair value gap. Now, we ended up doing that, and I was in a trade. I got into a long like right here, and then I got stopped out right here, I believe, because I had put my stop loss right here on this order block, thinking that we weren't going to go below that order block. And then, obviously, we go up and hit all my targets, which kind of sucks. But this is like where you kind of don't want to get caught in. This is like a high resistance. You're going to be in that trade for a long time. I mean, it took a long time for that trade to plan out, right? So it was like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It was like 45 minutes almost of candles. So these are the trades that I really want to take. These are the trades that I want to take, right? Following that, so we hit this, and so this is something that I need to pay better attention to coming into the future, is there's a fair value gap here. I didn't realize there's a fair value gap here, but there is. And so if you look at the high or the open of this candle right here, you have the open at 29,140.50, and then the close of this candle right here is 29,140.75. There's a little gap right there. There's a volume imbalance right there. Not much, but there's a small volume imbalance, and that is what constitutes. And there's a volume imbalance right there too, honestly. So even that could be considered part of this gap. There's a much larger volume imbalance right there. There's a volume imbalance right there. So all of this coming down, like there's just these fair value gaps like all along the way, but it closes up right here, right? So we have all of that right there pretty much. It's like basically all we got was sells. We got nothing, no buys at all. There's no longs being offered into that price range, right? So we come back up and we go up through the first presented fair value gap exactly like I thought was going to happen. We come up here, we touch the bottom of this, and I didn't have this on my radar, but then we sell off right here. We get a good model right here, so we get the CISD, we get displacement down, we get a retest at the 1 minute fair value gap, and then we just sell off. Eventually, at the end of the day, coming down to the bottom of the RTH gap and taking out these lows. So it felt pretty good, honestly, that my read was right. Like I was right, and so that was what's cool. I didn't take the right trades. I didn't make money off of that, but you know what, dude? That's all good, man. That's all good, right? It's all good, dude. You just learn, dude. You just learn, bro. And every single day, you just get a little bit better, man. And I feel like I am getting better, so fuck it. I don't care. So let's go ahead and talk about like this stuff right here. This is stuff. So this is the trade. This dude ICT took the trade like right here. This is where he took the trade. And I want to understand this concept more, so I'm going to talk about it, even though I don't really understand it very much. So at open, we come up here, we take out, these highs, we take out, this area right here, and then we come up to here to this little fair value gap, and then we reject. Now what this is is a high up to the bottom of a PD array, the first PD array that we could use. And it's like the most salient one that we can possibly use, and that's the 1 hour fair value gap created on Wednesday. I'll show you that real quick. We have a 1 hour fair value gap right here. This busy. We use it to go down, and we're gonna use that as a PD array here in the coming days as well. So this is what ICT kind of teaches in his video today. And again, this is his content, not mine. I'm just learning. I'm just learning what he's saying, and I'm trying to repeat it so it's something that's in my brain too. Like I'm trying to be a bad mofo trader. You know what I'm saying? Anyways, so he gets a fib, and then he takes the fib, and then he takes it from this high to the bottom of that fair value gap right here. Boom. And now you have all these quadrant levels. Now, this is where it gets really interesting, because it tells a lot. Even without this, I remember looking at this, and so we got this first presented order block right here, and then we get these levels up, and then we get this candle down. And I remember, and you can watch my live, I was like, that's not going to be just like a swing down. This is encouraging shorts to stop them out. And that's exactly what happened. We encourage shorts to stop them out. We get this breaker, right? High, low, higher, high, low. We get this breaker, and then we take it down further, which is like alone in itself a pretty good. That's a pretty good indicator that we are going to go down lower. And I should have known that. I should have known. I should have taken it right here. Honestly, this is where I was looking at taking it, and I just, oh god. So as time goes on, but here's what ICT taught today, and it's cool. I think it's cool. So right here, we get this order block, and then we come up here, and now so we get this swing high right here, right? And this is the halfway point. This is event horizon between the high and the low of the fair value gap, right? Event horizon. This is the halfway point, consequent encroachment. We come up, and we're not able to reach consequent encroachment. I think the wick actually does touch it, but on my recordings it doesn't. And then we get this swing down lower, and then we come back up, and we take out the shorts right here, because people were shorting right here early. They put their stops right here. We take that out, and then we come up here, and our bodies are staying below the upper quadrant, failure to touch upper quadrant of this space in between the high and the low. It's just another thing to use and understand that I want to understand. And then we get this wick, boom. A wick, not a body. The bodies are not crossing this line right here. This line right here obviously has some kind of significance. And I bet you can look over here and you can find something that would give you a reason why. Let's go ahead and look at it. So you come over here. What do we have? Well, we have this wick. Interesting. There's this wick right here. Wick. Huh. I mean, how do you know to use a wick? It's just time and energy. Anyways, so we have the equalize below. We're creating this breaker. We then inverse this fair value gap with speed and aggression. Nothing green in this area at all. We create this fair value gap. We create a rebalance. So once we break this CISD and we come up here, I remember I was like, I want to take this short so bad, and I didn't do it, and it made me a little upset, but it's okay. It's okay, man. It's all good. And then we come back. We take these lows. And my theory for the day is that we were going to hit consequent encroachment, and that we would eventually hit these sell side targets right here. So that's kind of like what I picked up today is looking for opportunities to just study this, right? This is something I'm going to have to back test and use more. And with you, even without it though, let's say, I mean, that's like for ultimate precision, right? Like that's like the perfect precision because he's using those for entries. He's saying this didn't get above consequent encroachment. This Judas swing couldn't touch consequent encroachment. And then we get the stop run. We're not able to get up into the upper quadrant of it. And he realized this is engineered liquidity. Takes it short here. Takes it all the way to the bottom. It's an amazing trade. I mean, it really is. We have the first presented fair value gap right here. Right? And I already have that marked off, so I'm not going to. First presented fair value gap. We inverse it. That's first utilization. So we have a bullish fair value gap utilized bearishly. So I think that gives mixed signals, but we had a bearish day, right? So, I mean, we really didn't have a bearish day, though. We had like a just break-even day. We started right here and we ended right here. So we didn't gain any ground at all. We just kind of moved around in this area. Other things I wanted to take note of was the 8:30 time and the midnight time. So midnight and consequent encroachment of the RTH gap are exactly right here. And if you look at it, we actually move up from the midnight time. So we tag midnight right here. We get this breaker, low, high, lower, low, high. We get a breaker structure. We come back down here. I mean, I think this is so I entered a trade right here. And the reason my confluence was that we got this CISD even here, and then we got another CISD with multiple fair value gaps. We got this retest right here of the fair value gap down here. I entered in one of these candles, and then we moved higher, and then I ended up moving my stop up and getting stopped out. Just it wasn't moving very well, but with that we did end up taking out my targets, and that would have been a good trade, man. Honestly, I mean, it wouldn't have been bad. It's not terrible. It just didn't move the way I wanted to move. I'm guessing I probably entered like right there, 140 points. Would have been a good trade. And it's all good, man. It's all good. I didn't lose any money on that trade. And then after that, here. Okay. So let's look at the 8:30 again. Yeah. So yeah, I mean, we got a little manipulation above 8:30. I guess that's like a manipulation above 8:30, and so that should have been assigned to this manipulation above 8:30, and then boom. If we manipulate below 8:30, that's higher chance we're gonna go move higher. And then we get this move right here, and this is another move too where it's like that wouldn't have been a bad move either. We get this area, we reject this fair value gap up here, and we're delivering from that fair value gap. We come through here, boom, slice right through that first presented fair value gap, come up, retest it, and we just start moving lower. It wouldn't have been, it'd have been another one like this other one right here, but we do eventually hit that sell side target, and it would have taken a long time. I mean, that's at 12:30, and we don't hit it until the end of the day at 16:47. So we're talking 4 hours in a trade. It's a long time. It'd have been a pain in the butt to deal with. Let's see. What else do I have in here? So we have this low, high, lower, low, higher, high, and then this retest. Honestly, like my goal is to learn how to start taking trades with a little bit more anticipation. Instead of taking it here, and that's something that's going to take some time. Obviously, I'm still learning, but yeah, I think that's about what I got for the day. I'm really excited to continue moving forward, and I feel like I'm growing as a trader, and I think that's really just the best thing. The most important thing is to be growing as a trader, and I ended on red. I think I ended on like $277 negative, and I was able to end the day and just quit and just call it a day, and I think that's important. I think that's good. I'm really proud of myself for being able to do that. So I'll come back tomorrow, and my wins are much larger than $277, and so I'm really not too worried about it, and it's all good, bro. I feel like I'm reading price the right way, and I'm learning every single day, and I don't think I can be stopped, man, honestly. So it's just a matter of time. So that's my review for the day. I can't wait to see these reviews in like a year and just seeing like how much they've gone and move forward. So, all right, I'll see you.